Everyone is waiting for housing prices to crash, but instead, the market is freezing. Buyers are waiting for cheaper homes, while sellers refuse to sell. Millions of homeowners locked low interest rates and now don't want to move. Buyers now face higher payments, and affordability keeps getting worse. So supply stays low, and the market stops moving instead of crashing. But markets don't stay frozen forever. Eventually, something shifts. Most people wait for obvious signals, but then it's already too late. Smart money is watching this quiet shift while everyone waits. Because when housing moves again, it usually moves fast. And something is quietly building in the housing market right now. The biggest reason for this freeze is interest rates staying much higher than before. Higher rates don't just affect prices, they completely change monthly payments. Even small rate changes can add hundreds of dollars every month. That makes the same house suddenly much harder to afford. So buyers step back and wait for something to change. But sellers don't lower prices because they don't need to move. Many homeowners would rather stay than lose their low mortgage. This keeps supply extremely low across the market. And low supply quietly prevents prices from falling fast, which creates a market that looks calm but builds pressure underneath. This creates pressure in the housing market that keeps building quietly. Low supply and weak demand are happening at the same time. That's why prices look stable even when the market is not. From the outside, everything seems calm, but underneath, things are shifting. Fewer homes are being listed than in normal markets, and buyers are becoming more careful with every rate change. Many homeowners are locked in and simply not moving. That keeps inventory tight across the entire market. So when demand returns, supply may not be ready, and that's when housing markets usually move fast. The moment interest rates start to drop, buyers will quickly return to the market. But there still won't be enough homes available for everyone. That imbalance between supply and demand can push prices up again, even if the economy still feels uncertain to most people. Because housing markets move based on supply and demand first. And right now, supply is already extremely tight across the market. Many people are waiting for a big crash that may never come, while the setup for the next move keeps forming quietly. These quiet phases are usually the most important ones, and the housing market right now is unusually quiet. When the market finally starts moving, it usually happens slowly at first. Small changes appear before most people even notice them. Buyers begin returning while inventory is still very limited. Prices don't jump immediately, but pressure starts building again. And tight supply makes every new buyer more important. This is how slow markets quietly turn into fast ones. First movement is small, then momentum begins to grow. And once confidence returns, demand can increase quickly. But supply still takes time to catch up, and that's when housing markets can move faster than expected. Most people only react after prices already start moving, but by then, the best opportunities are usually gone. Smart buyers watch the quiet phases before momentum begins, because that's when competition is still low and negotiations are still easier than in hot markets. Once demand returns, those advantages disappear quickly. More buyers enter and choices become limited again. Sellers gain confidence and stop lowering prices, and the market shifts from slow to competitive very fast. That's why understanding this phase matters right now. As more buyers return to the market, pressure slowly starts building again. But supply is still limited across most areas right now. That means more buyers competing for fewer available homes. And this growing competition slowly pushes prices higher, even if the movement looks small at first. Momentum usually builds gradually, step by step. More buyers notice the shift and start entering the market, which increases demand even further over time. But supply still can't adjust quickly enough. And that's when prices can begin moving faster than expected. As momentum builds, more buyers begin entering the market again. But available homes are still very limited. That keeps pressure on prices to move higher. Even small increases in demand start making a difference, because every new buyer competes for fewer homes. Sellers begin noticing the stronger demand, and confidence slowly returns to the market. More buyers step in before prices move further. Supply still remains tight during this phase, and that's when housing momentum really starts building. Once momentum builds, the housing market can change much faster than expected. Buyers who waited too long suddenly start rushing back into the market. Competition begins increasing across many areas at the same time. Fewer homes start receiving more interest from buyers. Sellers slowly gain more control over pricing decisions, and price reductions begin disappearing from listings. The market shifts from cautious and slow to more competitive. Confidence slowly replaces fear among buyers. Demand begins increasing faster than supply can react, and that's when housing prices can start accelerating again. As more buyers return, competition across the housing market continues increasing, but the number of available homes still remains very limited. That slowly starts pushing prices higher across different areas. Sellers begin receiving stronger and more frequent interest from buyers, and confidence continues building on the seller side of the market. The market no longer feels frozen like it did before. More buyers step in early before prices move further. Fewer options remain available for late buyers entering the market. Demand keeps growing faster than supply can respond, and the housing market begins moving with real momentum again. At this stage, the housing market starts feeling more active again. Buyers begin making faster decisions compared to the frozen period. Waiting becomes riskier as prices slowly begin moving higher. More listings start receiving multiple interested buyers. Sellers gain confidence and hold firmer on their price. Price cuts become less common across many listings. The balance slowly shifts back towards sellers again. Competition increases, especially for well-priced homes. Buyers begin adjusting expectations to current market prices, and the market transitions from slow into competitive conditions. As competition grows, buyers start acting more quickly. Hesitation becomes more expensive in a rising market. Well-priced homes begin selling faster than before. Fewer listings stay available for long. Sellers notice the shift and adjust expectations higher. Buyers begin accepting current market conditions. The gap between buyers and sellers starts closing. Activity increases across more parts of the market. Momentum builds as more deals begin happening, and the housing market continues strengthening quietly. At this point, the housing market starts feeling more normal again. Buyers begin accepting that prices may not drop much further. More decisions are made without long periods of waiting. Activity increases across different price ranges and locations. Sellers gain more confidence in holding their asking price. Fewer homes remain unsold for long on the market. Momentum continues building step by step over time. Demand stays steady while supply remains tight. This combination keeps upward pressure on housing prices, and the trend slowly becomes more visible to everyone.